Hello and welcome everybody to a Euro USD review from 10th of October 2023. My name is the OTE Trader and I will be narrating this video for the MMXM Trader. We're going to be talking about a London low of the day and a New York continuation classic buy day and actually passing a 300k prop firm account with it. So over here we've got the Twitter posts from the MMXM Trader. Link is in the description of the video as well. We've got that London session execution and as well that New York session execution. So let's quickly take a look at the dashboard from the MyFundedFX. It's a 300k account, so profit target is 5% for phase 2, which is $15,000. We can actually see the target has been hit. And if we look at the equity curve, a nice steady equity curve into the profit target. And over here passed as well, and we're going to be focusing on that Euro USD execution, right? We've got the London session execution over here, which is a nice 3.5% ish, and then that New York session execution, which finished off the challenge. So we always start off with DXY, right? This is the monthly time frame for the US dollar index. We're going to be focusing on the PD arrays and where liquidity has been taken already, right? We've got a larger dealing range from this low until this high, so we are above that 50% level, right? So this area over here is in premium. We recently took out these sell stops over here, so it makes sense that we're reaching for an internal range liquidity, which is this monthly fair value gap. Now we're having a fractal dealing range as well. So if we zoom in a little bit more, we've got this low until this high, right? So we've got another dealing range inside here. Everything above the 50% level over here is in premium, so we can expect a retracement once we hit that, and everything below it is discount. Previous monthly high had been rated, so going above that 50% level of this dealing range, we can expect some sort of a retracement. And if we go to the daily time frame, we can actually see how that looks like a little bit more zoomed in, right? So we've got that daily time frame over here from the dollar index. Previous monthly high has been rated. We can see over here price is declining, and if I outline this daily fair value gap over here, this is a bullish fair value gap. This one is being disrespected, so we can expect a short-term sell narrative. So we can expect a short-term sell narrative from here on out. We're going to outline the sell side liquidity over here, right? We've got sell side relative equal lows, and take note, on Monday we had a bank holiday. So with a bank holiday, you want to skip that day, low liquidity and higher spreads, and overall just a less favorable price action, right? So we're going to be focusing on a Tuesday. Now, Tuesday continuation, why? Because the sell side liquidity was still intact. So a Tuesday continuation, why? Because the sell side was still intact, so we can still look for this as a target, right? So we're gonna go to Euro USD daily chart. We know Euro USD is inversely correlated with DXY. We've got that same daily fair value gap over here, right? Just like DXY's bullish fair value gap, we've got that bearish fair value gap for Euro USD. We can see it being disrespected as well. And once we disrespect it, we can actually use it as a support level, right? So previous monthly low liquidated, bearish fair value gap disrespected, and then we have that buy side liquidity as our target. Now let's talk about the basics behind the classic buy day. So first of all, you want to have a Asian session accumulation or consolidation, right? So why do we want this? If you guys know about an AMD schematic, that's an accumulation, manipulation, and distribution. Asian session is the start of that schematic. So London session low of the day, that's the second thing we're looking for in a discount PD array and also below New York midnight opening price. And the third thing is a New York session discount retracement, and this will be continuation of the London session order flow. And we're going to outline that, how that looks like in the charts. So here we have a crude depiction of how that looks like, right? Asian session consolidation. We have our drawn liquidity up higher. This is our target. This is where we want to take profit. Now with this Asia range being a consolidation, we can have a manipulation phase for London session, we've got a discount array which we want to wait for it to get hit. We need to be below New York midnight opening price as well. London manipulates lower into the discount array, and then we can see an expansion up higher. And then during New York session, you can expect a retracement into a discount array and then continuation if the draw on liquidity is still intact, which it was for that particular day. So over here we've got a 15-minute time frame for Euro USD. Now we can actually see a little bit better how that looks like, right? We've got that dealing range over here from this high down to this low. We've got a discount fair value gap, right? Because it's below the 50% level of this dealing range. We've got number one, Asia range accumulation or consolidation. Then New York midnight opening price has been outlined. Always outline this on your chart. You want to be a buyer below it and a seller above it, depending on what your directional bias is. So you can see London session manipulating lower into the discount fair value gap, and then an expansion happens afterwards. And then we can see New York session, it retraces and leaves the buy side liquidity intact. So there's still a target. So you can expect a New York session retracement and then distribution up higher to liquidate that buy side liquidity. So over here again, we've got that 15-minute time frame. Buy side liquidity, relative equal highs, right? Tapping the high of that inverse fair value gap on the daily, right? That disrespected bearish fair value gap. Outline that New York midnight opening price. We want to be below, just like we just saw in the AMD schematic we outlined. Important, draw out your correct dealing range, right? Down here, discount, up here, premium, and then we want to be in discount if we want to be a buyer. Very important, stick with the kill zones because that's the high probability time window where price will expand or at least be favorable to take an entry on, right? So we have the 2 to 5 a.m. London session kill zone. Over here, during that kill zone, we can see the stops being accumulated, right? The sell stops are being accumulated down here. So this sets the stage for a buy program later, and we can see price action expanding rather significantly into the buy side liquidity. Now over here on the 5-minute time frame, we can actually see a ICT 2022 YouTube mentorship model, right? Because we have a buy side or sell side rate into a market structure break up here, and then where do we enter? On a fair value gap, right? So this is a nice model 2022 ICT mentorship, and this is actually where the execution happened, right? We've got that fair value gap here, entry on the fair value gap, take a partial and then another partial, because taking partials is very important. Now let's discuss that New York continuation. So we've had that London session trade. There is more buy side liquidity, so there's still a target intact. We can see this new dealing range over here. This is the London session expansion, and we can expect price to retrace back into discount. And what are we going to be looking for? A discount PD array, right? A discount array, which is this 15-minute fair value gap. We can outline it over here, and you can see how price beautifully taps into that discount fair value gap inside the kill zone. Once again, you have to be in the right time window to take your trades, right? Higher probability if you stick with it with the kill zones. So I want you to take a look at this chart right now, this 5-minute chart, and what are you seeing over here? So if you set a market maker buy model, you were correct. We always want to look for a market maker model. Why? Because you can determine which side of the curve you are on. So if you know which side of the curve you are on and where it's most likely to have a smart money reversal, you can use the opposing PD arrays from the sell side of the curve for the buy side of the curve for a buy setup. So we can see those sell stops accumulated once again in a discount array. Very important, just like what happened in New London session. We've got the original consolidation here, so that's the target. We can see accumulation phase 1 and 2 down here, smart money reversal, and now we can outline where we can frame our trade setup from, right? So we've got that old selling into new buying, which is a mitigation block for reaccumulation. So after this smart money reversal happened, we can see buy side of the curve is kicking in, and we can use the opposing PD arrays from the sell side of the curve to frame a setup on the buy side of the curve. Over here we've got the executions from New York session as well. So we've got the London session execution, right, in that fair value gap with the partials, and then another entry on that old selling into new buying, right, that mitigation block over here. And then we can see target has been hit above the original consolidation, and then account has been passed. Hopefully you found this video insightful and you learned something. If you did, make sure to hit that like button and subscribe for future content. All the links are in the description. My name is the OTE Trader and I wish you all a great day.